Welcome back. You're watching The Fix with me, Karima Brown. I'm in conversation with two captains of industry, ABSA CEO Daniel Mniele and HCI's Johnny Copeland. Johnny, let me start off with you. You are pushing for a complete reopening. One of the viewers of this program says it's completely horrifying because the levels of transmission fell dramatically with lockdown, especially because the main areas of transmission were in fact outside the home, as in China's experience, public transport and restaurants. What evidence have you got to back up your claim that the infection is runaway in communities and that it's best to let people just come to work?
So, Karima, look, number one, I don't say there must be a free-for-all. Every industry has to negotiate with government as to how it is going to ensure a sufficiently safe set of standards to allow it to reopen. But the thing that is fundamental is you can't say we're only picking certain industries and allowing them to open and not interested in the others, they must wait. If you say that the solution is you must wait and be locked down, then the state must pay for that. The state must pay for the people who are locked at home, and it can't afford to do that. Our budget had us with a 300 billion rand deficit to start. The rescue plan government is proposing is another 370 billion rand. The Treasury says they will collect 400 billion rand less taxes than in the budget. That's over R1 trillion of further debt. You know, where we're heading to, just on what's on the table at the moment, is a state where a third of all taxes raised are used to service past debt. There's no ways in which the state can take on more responsibilities than what it does at present. Before this thing started, we had 16 million people earning a living out of their labour and 17 million on government grants. The notion that the government must take over another 7 or 8 million people is totally beyond the state's capacity. There are no choices. It's not a matter of saying, well, I've got different policy in mind. There are no choices available to a state that is on its knees like this.
But if you accept, Daniel and Johnny, that we are in uncharted territories, there is no cure, there is no vaccine. The only way to slow this down is, in fact, to stay home. Shouldn't we be reimagining the economy? Shouldn't the banks, for example, come to the aid of businesses such as HCI, who are in the hotel industry? Isn't the opportunity here to look at reimagining your industry? In other countries, for example, hotels have been used as hospitals, at quarantine sites, and you can, of course, charge the government for that. Daniel, will you be, as a bank, prepared to bankroll some of those initiatives involving, let's say, businesses in the hotel industry and government?
Karima, before I answer that, let me just comment on what we've been discussing just now. I think it is critically important to understand that in some way we also need to have some sympathy for the position that government finds itself with. They're clearly being given all these pieces of advice, possibly conflicting in some instances. Much as they might have more information that you and I and Johnny might have, it's by no means complete and certainly not perfect information on which to base decisions. So in some way, you've got to take risk, you've got to take calculated risk and work out what the right balance is. I mean, the analogy that comes to mind there, which is no different, I think, in terms of how you would think about a macroeconomic management perspective, is that of a sort of a daily wage earner, somebody who gets up and basically try and find a job on that day, and whatever amount of money is earned that day is what's going to put food on the table. And so if you're sitting in an environment that we're in now, and you've got these trade-offs and these decisions to make, you could say that I can be locked down and be guaranteed death by starvation, or I can risk going out there and take a calculated risk that I may be infected, more severely so, may not survive it, I may have mild symptoms, I might survive it. So I think that's basically the trade-off that we need to get into. The worst thing that could happen to us, I think, if one were to say, let's just open up, let everybody get to work. And I don't think anybody's suggesting that. Certainly, it's not what I hear Johnny to be saying. And most of the business people are not saying that. But we need to make sure that we don't get into a situation where potentially we open up in an uncontrolled, irresponsible manner and end up having to reimpose a level 5 stage, which would have other social implications. But coming back to your question, the banks, of course, have been doing exactly what you're asking. We have been, as we actually do in the ordinary course of business, but much more heightened given the environment that we are facing. We have been working with our clients. There have been payment relief programs that have been instituted both for individuals and for companies. And if we just think about, and the Banking Association just put out the numbers yesterday, think about what sort of cash flow relief impact has gone into the system since the 16th of March to say early last week. There have been something like 7.7 billion that has been sort of put into the system.
Okay, Daniel, can you just hold for me there? I just want to bring Johnny in. Johnny, HCI as a group, have you been able to access any funds from that 500 billion that government has made available and some of the monies that have been made available for business? How does a group like HCI speak to government on assistance, financial assistance, and, of course, negotiate the different levels of the lockdown?
You know, Karima, we're all in this together. Right? We are involved in collecting money from the state for employees of ours. We would have a 200 million rand a month wage bill to pay on our own, which we could not do. We don't have any income at the moment. So we have accessed state funds for that. But for our own business, which is a larger business, we have not been able to do that as yet. We are in the hands of banks who, as was said now, are facilitating cash flow into a cash negative business. But there is a limit as to how long you can do that for, and there is a limit as to how the business will ever repay that money. So, you know, you're under pressure to get going again, which is just not being released by saying, well, we must just stay locked down. It is not possible to lock everybody down unless you feed them. And the state does not have the resources to do that. It simply doesn't.
Daniel, let me bring you in here. The question of offering people assistance, not everybody is guaranteed the loan and the facilities that you're making available, because it's not a blanket. You are doing it also on risk assessment. How is your own financial packages changing? Because the subtext that I'm getting from both of you is that you are measuring your responses to what was, and we are clearly never going to go back to what was. We are in a completely new situation. So what new instruments are you putting on the table to assist businesses, both the size of HCI and smaller, to deal with some of the financial pressures that come with COVID-19?
Yes, Karima, as I was saying earlier, for instance, with regards to sort of commercial and businesses, small, medium, and enterprises, there's been something like 7.2 billion, for instance, that has gone into the system, and we're seeing those demands increasing. 1.2 million individuals have applied for these reliefs, and over 850,000 have been assisted. But the issue here, as you say quite correctly, this is support that's been given to customers that were in good standing before, that have just gotten into this situation as a result of COVID-19. So that means that it's people that you give a break, you give support, but those are people that are typically strong enough to be able to resume and clear those debts afterwards. So this is obviously not debt relief, but it's a payment relief and a break. And of course, the instruments that we're using for this would be bespoke, because at the end of the day, each and every customer's situation is very different, and you deal with them on that basis of their own particular environment and devise solutions that are most suitable to their needs.
All right, Johnny, let me give you the last word. We're running out of time. For a group like HCI, what do you require from the financial sector and the government to survive if we are to stay in this phased lockdown approach with the economy opening up at a lot more slower pace than you would have wanted?
You know, Karima, in 2008, there was a banking crisis. The banks were in a mess and they were not able to maintain liquidity through that crisis. This crisis is not a banking crisis, and the banks are a lot stronger and they can play and do play a special role in keeping liquidity in the economy. But they are lenders. They're lending money to people who have to pay it back. Whether it's HCI or whether it's the government, it's the same. You have to pay the money back at some point. And if you simply accumulate more and more and more debt up to the level that you can't pay it back, you are bankrupt. It doesn't matter what your hopes and dreams about the future are, you are bankrupt. And our state is rapidly going there, as are many businesses. The only way to get forward with this thing is to, as a matter of great urgency, open the economy safely. You have to take some risks. You have to impose standards on employers. You have to get ideas from employers. How will they be safe in their operations? I don't say you should just make this a free-for-all, but you have to lift the lid on economic activity because the state cannot afford to pay people to stay home.
All right, that is where we leave it. Some very big challenges. Johnny Copeland, CEO of HCI, and of course also Daniel Mnyele, the CEO of Absa Bank. Up next, the hammer and the dance with economist Niva Makgetla. Don't go anywhere.